Hello, everyone. My name is Shannon Ballman Theis, the payroll queen. And today we are going to be taking a look at instructions for Form 941 and the different little intricacies that are involved with this form. Outsourcing payroll duties. Generally, as an employer, you are responsible to ensure that tax returns are filed and deposits and payments are made, even if you contract with a third party to perform these acts. You remain responsible if the third party fails to perform any required action. Before you choose to outsource any of your payroll and related tax duties, that is, withholding, reporting, and paying over Social Security, Medicare, FUTA, and income taxes to a third-party payer, such as a payroll service provider or a reporting agent, go to irs.gov/outsourcing payroll duties for helpful information on this topic. If a CPEO pays wages and their compensation to an individual performing services for you, and the services are covered by a CPEO contract, then the CPEO is generally treated for employment tax purposes as the employer. This is really a key piece of information to know, you guys. If you use a PEO or a CPEO, they become solely responsible or can become solely responsible for ensuring the returns are filed on time, which is the federal returns, the tax liabilities are scheduled and paid on time. And if they're not, the IRS is going to go after them and not you, because you have a CPEO contract with them. And in that contract, they take full responsibility for any unpaid taxes and any returns that need to be filed. So what I've had happen a couple of times with clients that have come to us for payroll restoration work is they were with a PEO and they bounced a payroll or bounced a tax payment. Generally speaking, PEOs are not going to have a lot of tolerance for payments that get bounced, because according to this section of the 941 instructions, they are responsible for the taxes and the tax returns that are filed. So if you do use a PEO or a CPEO, may be super careful and make sure that you don't bounce a payroll, because otherwise, and they don't have to give you any notice. Like, you bounce a payroll or a tax payment fails, they will let you know that usually your only warning is your cancellation. Like, you don't get a warning. Some of them are a little bit more generous, and it depends on the length of time you have been with the PEO or CPEO to see how flexible they will if you, for whatever reason, miss or bounce a payment. But generally speaking, because they are on the hook for any tax payments, even if they can't collect it from the business, that contract says that they're on the hook for those liabilities, and they have to pay those liabilities whether or not the business pays them for those taxes. So be careful. And the IRS also has more information available for different types of third-party arrangements, which is in section 16 of publication 15.